Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, April the 30th, and wanted to take just a brief minute to discuss what equity markets did last week, as it was a relatively tame week on the index level overall, with the S&P 500 being up 55 basis points or 0.55% on the week. The mid-cap index, as measured by the S&P 400, was down 14 basis points or 0.14%, and the small caps were the leaders on the week. They were up 70 basis points or 0.7%. And the market that last week was really looking forward to this week and what the big tech companies were going to report. And they really were concerned about what they were spending on AI and the AI build out, bases their growth rates and things along these lines. And we'll discuss that in a minute. But on Tuesday, there was an article in the Wall Street Journal that came out that said OpenAI had uh, essentially what they were reporting had missed their revenue targets and growth rates on users. And so you saw a large sell off in anything related to AI, the hardware, the software, anything along those lines. You saw a sell off. But to put that into perspective, the semiconductor index, or the SMH, was up about 50% in the 3 weeks prior to this week. So the 3% down day that it saw on Tuesday was just a relatively normal digestion period for that individual ETF that tracks the semiconductors. So as we got to last night, we heard from Microsoft, Meta, Amazon, and Google on their reports. And what was amazing is how much these large companies beat on their targets, primarily in the cloud business, is where their growth rates are coming. All of these companies exceeded expectations on growth rates in their cloud business, which drove revenue higher. So why is this all important? Well, you heard from Microsoft and Google. These two companies alone are spending expected to spend and anticipating to spend $190 billion each this year on AI build out. The four names I just named you combined will be roughly $700 billion committed this year in build out. Well, where is this coming from? Well, what's fascinating too about this is we discussed a couple weeks ago that earnings were, what drives the market, and we're expecting 20% earnings growth in the S&P 500 this year. So I wanted to see, is that all efficiencies that companies are doing, or is there other things behind the surface? And what was fascinating that I discovered and that we discovered is that revenue is growing at a rate of for companies that have reported so far for Q1 of 2026, their revenue growth rate year over year is 10.3%. So half of what the earnings growth rate is, and it is the most that we've seen revenue grow in almost 4 years on a quarterly basis. So sales are up for majority of these companies, which is allowing for this expansion. And so then you're seeing efficiencies on top of that, and it's no surprise that where we sit today, we are at all-time highs. And what's going to be interesting is as this money flows through the system, it is not just the semiconductors that are being bought, the memory names that are being bought. This affects everything down to local economies. This does everything from your concrete business to your water to your energy, your connectivity, your broadband. Hits almost every sector. And what's going to be interesting to see is we don't expect that this will be the rate at which these companies reinvest in capex in the infrastructure side of this. But what's going to be interesting to see play out is computing, and the need for compute is an infinite game. So now you really have industries that are built on compounded growth just in the need to continue to compute and then to hold that data and store that data. The data storage is not going away. It will never decrease. You will always need more and more storage. And so as you're looking out long term as an investor into some of these, when you see the big down days, I caution just a a moment of pause when that happens, and just let things flush out. Again, a lot of these have had really, really big runs in a very short period of time. But if you have questions about how to navigate your portfolio, how this is going to impact everything, the revenue growth rates remain high and strong, and that should be very, very beneficial for stocks moving forward. So if you have questions about how to navigate or what to do, well, now that we are at all-time highs, give us a call. We'd love to talk to you. You can reach us at 904-346-3460, or as always, visit us online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.